I'm delighted to introduce the CEO of Bet at Home, Franz Őmer. Hello, Franz.
Hello, hi, how are you?
Would you talk about the key highlights of your FY20 results, especially the EBITDA beat that you've delivered?
Well, the global spread of the pandemic had a significant impact on the Bet at Home group since mid-March last year, with the cancellation and postponement of the national, respective international sport events. Despite all this postponement and cancellation during the year, we already reached the lower end of the full year EBITDA forecast in the range of 23 to 27 million after the first 3 quarters last year. And due to the clearly positive revenue and earning developments in the fourth quarter last year, the full year forecast was ultimately significantly exceeded with an EBITDA of 30.9 million in the financial year. So the consolidated net income of the financial year 2020 amounts to 23.3 million, and this is 29% higher than in the previous year. So this corresponds to earnings per share of 3.30 euro per share. We were also able to increase consolidated equity to 50.9 million as of December 30, end of December last year. This corresponds to an equity ratio of 53.5%. Furthermore, cash and cash equivalents and short-term deposits amounted to 56 million as of December. So this corresponds to 8.1 euros per share.
Okay, that's great. Thank you very much. Second question is, you initially gave guidance in November on the impacts of the regulation changes in Germany. Could you talk about what you've seen on the ground so far, please?
2 main topics have been changed. Since November, we have been granted with a national-wide sports betting license in Germany. This means we operate under this national license right now. For the casino, the licenses should be issued mid of this year, but until then, until the licenses are issued, all the operators who want to apply for a license had to be compliant with the future regulations already. These restrictions contain 2 things which have a negative impact on our GGR since October last year. This is, first of all, the ban of table games such as roulette or blackjack, and also a monthly deposit limit of 1,000 euro per customer and month.
My next question is, in your guidance in November, you indicated that the regulation changes would lead to revenue lower by about 20 million and EBITDA lower than by about 13 million. The new guidance looks a bit better than that. So could you just talk about what has changed?
With a decline of 30 million euros in EBITDA compared to the fiscal year 2020, we anticipated all negative effects regarding the requirements of the German sports betting license and the conditions of the transition phase for the casino license. So as we don't expect any further downside potential, 80 million euros is the minimum EBITDA range to achieve, which still gives an upside of 4 million in the positive scenario.
The wide range for the new guidance, is that just due to the uncertainty in Germany, or are there other potential negatives in the business?
Apart from the liberalization steps in Germany, the regulatory environment in the other markets remained unchanged. In Poland and Switzerland, we are still facing ISB and BSB blocking measures. All the other countries where we operate, we are quite satisfied with the business as such.
So now that the German regulation changes are out of the way, are there any other markets where you expect regulation changes over the next 1 to 2 years?
After many years of postponements, the Netherlands are planning to issue licenses in the near future. If this is the case, Bet@Home will most probably apply for a license, as we see this market as a good chance for further diversification of our revenues.
My final question is, could you just talk about the dividend policy, given you expect lower EBITDA in FY21?
Well, in times of the global pandemic and the economic turbulences, it was nevertheless possible for Bet@Home to pay a dividend of €2 per share in July last year, and also to propose a dividend of 2.50 per share to the AGM on May 18th this year. While we have not committed to a specific dividend policy, we continue to aim to distribute the majority of the EPS via dividends. Alternatives such as share buyback programs or M&A activities are currently not planned.
That's great. Thank you very much.
Thank you.